Hey Option Sharks, how's it going? This is your option coach here. Today I'm in my new location. This is the fourth deck, the fourth floor patio. There's actually two patios, the fourth level and third level. But yeah, I moved to another location, and this location is still close to the beach. Show you guys right over there. Yeah, so just one block away, I can still enjoy myself at the beach. Okay, so today, this video, I want to cover about spreads and the wheel strategy. All right, what's the difference between the wheel strategy and spreads? All right, so the wheel strategy is a no-brainer strategy. It's very safe, it's very consistent, and it's also semi-passive. It is the best strategy out there for those that do not like risk, and also for busy professionals that don't have time to manage the positions. So the wheel strategy is hands down the #1 strategy. And also, if you have a much larger portfolio, you want to stick with the wheel, all right? Because the wheel is just as good as it gets. And then spreads, right? What are spreads? Spreads are considered advanced strategies. They are level 3 options, and these require more managing. You need to maintenance these trades. You need to monitor these trades. You need to make sure that they are performing correctly, because spread trades, it can get a bit risky if it goes in the money, and you must maintain a reserve capital in case you need to roll out the position, right? So rolling is super critical for spread trades, and it does require more maintenance, because if you're a busy professional, then you would need to monitor those trades in case if it goes in the money, and then having to roll it out. And then when it comes to rolling the spread trades, you can roll for credit, break even, or for for a debit, slight loss. Okay, obviously we want to aim for break even or profit, and then let time do its recovery. But the main difference between the wheel and the spread strategy is also the wheel strategy is less more passive, semi-passive, and it requires more capital, right? So wheel strategy requires more capital, because doing a cash secured put, you need the cash collateral in order to be able to open the trade. Or the other way around is doing a covered call, you need to have the shares as collateral to sell a covered call. And then with spreads, you can use less collateral to open trades, because the spread is just the difference between your two strike prices, where you're long and your shorts, where you sell your put or where you sell your call, and then where you buy your put and where you buy your call. The points between those two spreads, that's how the brokerage calculates the collateral needed to open the trade. So you can use less collateral to open spread trades and generate more income. And then wheel strategy requires more capital in order to open the trade. So one is more capital intensive, the other one is not. And then one is more passive and the other one is not passive. You have to actually monitor the trades. So those are the key differences between spreads and wheel. And like I said to you before, if you are a very more risk averse person, stick with the wheel. You cannot go wrong with the wheel. It's really hard to mess that up. I like to say the wheel is so easy, a 10-year-old can do it. And then spreads, it's more advanced, it's more than one leg, it's a multi-leg strategy, and it requires maintenance and monitoring of the trade. So those are the clear two differences. And then if you are in the markets or looking to get in the market, you want to get some guidance, you want to learn how to trade options, you want to generate income anywhere between 3 to 10% per month, I'll be more than happy to help. I helped many of people. I have a small community, a small group. I literally handhold you through the whole process. I trade with you, help you make money, answer all your questions around technical analysis, fundamental analysis, and strategies. And then also, of course, I trade with you live. So stay tuned on the second half of the video. Like usual, you'll see an actual coaching call that I do with one of my option sharks. So you can see me in action and see how I help my members make money. All right, if you like this video, like and subscribe, leave a comment, and then I'll see you on the next one. And we always want to keep reserves when it comes to doing advanced strategies and spreads. You never want to deploy the entire 27,000 into contracts. That's how you get yourself in trouble. You always want to do at least 50 or 40% in collateral for
So
options.
you have the option to roll and do,
Because you need capital to move it out, roll it out. A
Yep.
lot of beginners, they jump in advanced strategies and they just deploy all of it, thinking that the trade's going to work out perfectly fine. And what happens is when it gets in the money and they don't have capital to roll it, then you're forced to realize a loss, which therefore means you lose. And the collateral right now shows 7. That's what it's being held in collateral. But the value of these contracts, if it's in the money, it appreciates substantially. And then to close it out is quite expensive. Okay. So you need reserves. So in this case, you got 11K, 11.5K in reserves. Actually, no, you have 23K.
Yeah.
23K in reserves that allow you to navigate this position.
Yeah.
Okay, which is good enough. You don't want to do more than any more contracts than that. And if we're talking about $500 approximately a week, you're looking at 2K per month off of
Yeah.
a 20 off of working with a 23K. Yeah, that's exactly 10%. From what I was telling you
Yeah.
before, 5 to
Yeah.
10% off 23,000 is about it's
Yeah.
roughly around there. So yeah, so this is a trade that I personally am in on. I have a lot of contracts on.
Yeah.
And then yeah, and that's it. And let's see, it's 23rd. We can squeeze in a little additional income with the individual cash because this expires 23rd. We can get something for this Friday. You get what I
Yeah.
mean? And have
Yeah.
something expire the 16th. So
Yeah.
let's check out. There's a stock car, IREN. Let's see if the premiums are still very good. IREN.
Oh, IREN.
Yeah. And this trading probably around eight and change. There you go. Let's trade iron options, sell put, and this is going to be a wheel strategy. Sell put. Let's look at 750. Yeah, 19 bucks is pretty good for per contract. Let me
Yeah.
check one more stock on my side to see if we have something that's better than $19 per contract. Sell put.
So just curious, Anthony, my overall understanding of options so far, where would you rank me at? Um,
Mm, intermediate.
intermediate,
Intermediate.
right
Yeah,
on.
yeah. Better than a beginner, but intermediate still.
Yeah. I feel
Yeah.
like I have a relatively good understanding of it, right? Like, and not to put myself in positions that are gonna screw me, right?
Yeah, you have the understanding of the mechanics of it, but the nuances of it, the
Yeah.
intricacies of it, that's how you're gonna learn through coaching and
Yeah.
feedback loop, right? Getting asking
Yeah.
questions and things like that. That's how you get the guidance around that. Um, yeah, Archer is interesting. Archer has a lot of premium, but it has ran up a bit. I don't want to get
So we're
stuck on
currently
the
on day
yeah with
three from earnings, right?
yeah on Archer.
Yeah.
But it could be a new baseline because no one took profits. It ran up and it stayed around above $11. That's a good signal about how it's performing.
Well, they
Um,
ultimately synced up with Palantir, correct?
Correct. They have
Yep.
partnership with Palantir. That's right. Uh, I'm just debating between Archer or Iron, IREN. And I think the system has a Robinhood system has a glitch because if you're looking at lower strike price, the premium is, oh no, I'm looking at the wrong thing. I need to look at sell put. Okay. So 11, yeah, Iron is the best. All right. So what
Yeah.
is Iron? Iron is a Bitcoin mining company. They mine
Mm.
Bitcoin. So obviously crypto is having huge momentum. Uh,
Yeah.
and I think they had their earnings already. So and they're holding steady as well. So Iron, is something a stock I've been trading on for probably close to 6 months. I
Yeah.
rotate between Iron, IREN, CLSK, and ACHR for smaller portfolio sizes. This is the
Yeah.
best for this value. And actually, this trade we did last week with other people, and the premiums were like 0.40, almost $40 per contract. Because obviously, we're doing it Wednesday, where
Yeah.
it's 0.19. Now, $7.50 strike means that 100 shares is 750 bucks, right? So if based off your buying power, you have 11.5. So we just take 11.5 divided by 750, and that'll tell you the number of contracts you can open. 15 contracts. So if we hit continue, yeah, and hit 15, and we'll keep it at 1.9. That's another 284 just in 2 days.
Right
Okay.
on.
So I'll run this, yeah, and that's it. And then you have your spread that's expiring next week, right? And even if you get assigned these shares, you can still be liquid because you can sell and close it out, whatever you like. But the likelihood of
Yeah.
it going to 750 is very unlikely, right? Because it's very bullish momentum. So yeah, there you go. 284 plus five is about almost 8 days, no,
Yeah.
7 days, about $800, right?